勇敢地往前冲吧。有想法就有办法，有办法就不用怕，我们一起到达是 number one， 强大的企业家，超越表现的力量，我们一起到达是 number one， 强大的企业家，超越表现的力量。我相信我可以，有目标就往上爬。你相信你可以，勇敢地往前冲吧。有想法就有办法，有办法就不用怕，我们一起到达是 number one， 强大的企业家，超越表现的力量，我们一起到达是 number one， 强大的企业家，超越表现的力量。我相信我可以，有目标就往上爬。你相信你可以，勇敢地往前冲吧。有想法就有办法，有办法就不用怕，我们一起到达是 number one， 强大的企业家，超越表现的力。Hi, good morning, everyone. Wow, it's Friday morning again. And yes, welcome to our Facebook Live again on the Secrets Revealed series. Yes, again, today I will be sharing with you all another technique to solve tax audit issue. But we're going to start at 11 o'clock sharp. We are going to start at 11 o'clock sharp. So it's just in another few more minutes. Yeah, it's going to be just in just another few more minutes. Do not go anywhere. Just stay here. We're going to start at 11 o'clock sharp. But since you are so early, right? I can see a lot of people are coming in already since you are early and we have not even started. Help me do one thing. Yeah, you still have time right now to help me share this Facebook Live out. Yes, share this Facebook Live out, this Secrets Revealed series to your friends, your family members, your business partner, business associates. Tell them about this. Share this to them right now so that they can come in and learn this technique together with you. All right. Because a lot of people have missed the previous episodes, and then they ask us, hey, I always miss this and I do not know that there is this thing. So, let more people know about this. And this is a completely free session, for you to learn my secrets, to learn the techniques to solve tax audit issue. Just share it out by clicking the share button. Now, if you're viewing it from a phone, look at the bottom of the screen. You will see that share button, right? Just tap that share button. Yeah. If you are viewing this from a computer, you'll also find that share button, isn't it? Just click that share button and share this Facebook Live out right now. Or if you have anyone in your mind, yeah, that you want him or her to come in to view this together with you, just tag his or her name. Tag his or her name right now so that they will come in and they will learn this technique together with you. Today, we're going to talk about sales rebate. Yeah, we're going to talk about sales rebate. So we're going to start in just a few more minutes. So don't go anywhere. Stay tuned here. Stay here. Share this Facebook Live out. And I will see you at 11 o'clock later, right? 11 o'clock later, we will start our Facebook Live on techniques to solve tax audit issue. All right. So I'll see you later at 11 o'clock. Don't go anywhere.
我相信我可以有目标就往上爬。你相信你可以勇敢地往前冲吧。有想法就有办法，有办法就不用怕，我们一起到达，是 No.1， 强大的企业家，超越表现的力量，我们一起到达。企业家，超越表现的力量。我相信我可以有目标就往上爬。你相信你可以勇敢地往前冲吧。有想法就有办法，有办法就不用怕，我们一起到达，是 No.1。
Okay, good morning, everyone. Yes, it's 11 o'clock already. It's 11 o'clock sharp, and as promised, we will start our Facebook Live today on Secrets Revealed, Techniques to Solve Tax Audit Issue. Yes, as usual, every Friday, 11 o'clock, I will be sharing with you another technique to solve tax audit issues, yeah. And today is episode 17. Yes, episode 17. Now, some of you who probably joined us for the very first time would probably ask this, wow, episode 17 already. What about the 16 episodes? You know, what about the previous 16 episodes? You know, I missed 16 episodes. Don't worry. Yeah. Now, if you have missed the previous 16 episodes or any episodes that you have not actually watched, yeah, go to my Facebook page. That is Tax Guru Zen Chow, Tax Guru Zen Chow Facebook page. Go to the videos section. You will see all the previous 16 episodes all there for you to view, right? For you to watch them again. But of course, it's always better to watch live, isn't it? Because only during a live session, you will be able to ask questions. Yes, you can ask questions relating to today's topic, today's technique, so that I can answer to you live right now, yeah? So having said that, you know, see, attending to live is always better, isn't it? So do one thing for me right now. Share this Facebook Live out right now. Share this live right now to your friends, your family, your business partner, your business associate, so that they can come in right now to watch this together with you. Because this is a live session of which they can ask questions as well, and I'll be answering live answers, yeah, to all of you. So just share this out by clicking the share button. Now we're just about to start, yeah. Just click the share button. If you're viewing it from your phone, yeah, you can see at the bottom of your screen there's a share button. Like, tap that share button. If you're viewing it from a computer, you will also find the share button. Just click that share button, share this out with your friends, family, business partner, business associates, or just like how I see Andrew has just done it. Andrew has just tagged, right, his name, his friend. Yeah, you can do so as well. If you know anyone that is interested to learn this technique together with you, just tag his or her name, put it into the comment box, you know, and he or she will come in right now and learn this together with you, yeah? All right, now we're just about to start. It's 11 o'clock, so let's get things started. Let me just put up this one. And yes, today we're going to talk about tax audit issue as well. And I do know right now we're close to 100 people here. We're close to 100 people watching on Facebook Live right now. I know there are probably a lot of first-timers as well. I know there are probably a lot of first-timers today. Well, of course, I see Richard says, good morning to me already. Richard, you're definitely not a first timer, I know. You have been, you know, following me for so many weeks. Thank you so much for your support. Thank you so much. Now, but I still want to ask, you know, how many of you here are actually first timers joining our Secrets Revealed series next to solve tax audit issue for the very first time? If you're a first timer, can you just put number one? Just put number one in the comment box. Yeah, just type one into the comment box. Let me know that you are a first timer. You're joining us for the very first time. Yeah, because I want things to be very interactive. This is what the whole Facebook Live session is all about. Yeah, I want things to be very interactive. So my first question to the first timers over here, if you are a first timer, can you just put number one into the comment box to let me know that you are a first timer and you're joining for the very first time? Okay, I see Francis. Francis has just said that she's a first timer, or Francis, a he or she. Okay, now my Francis is a first timer. All right. Uma Devi is a first timer as well. I can see number one over there. Thank you, Uma Devi. Wow, Uma Devi has posted a question as well. Yeah. Don't worry, Uma Devi. I've seen your question. I'll answer to that question. Yeah, I'll answer to the question later. Just let me see who's the first timer. Yeah. Jane is a first timer as well. I have Ji Woon, also a first timer. Wow, so we have a couple of first timers today. Yeah, looks like, yeah, not bad. Now, but let me just okay, more first timers. Wow, we have Vatsala Ayadurai, we have Charles Su. Okay, now since there are a couple of first timers, so as usual, let me just briefly tell you who I am. You probably do not know who I am. Probably you will say, okay, I know your name. Your name is Zen Chow. People call you the tax guru of YYC. But who is YYC? You probably ask, you know, you're the tax guru of YYC, but who is YYC over here? Let me take this opportunity to briefly tell you who YYC is here. Now, YYC is actually an accounting and advisory firm. And we were established since 1974. And our aim, our brand promise is to empower entrepreneurial success. Yeah. Now, but to do that, of course, we have a vision and mission as well. Now, what's our vision? Our vision is to be the number one world-class accounting and advisory firm, number one world-class accounting and advisory firm in Asia. Our mission is more important. Why? Because our mission is to inspire everyone. We want to inspire everyone, including you, right? To overcome your odds, unleash your potential, more importantly, find fulfillment in life. Yeah, that is a very important mission. Yeah, but to do all this, of course, we have to uphold three important promises that we always have to uphold. First, we want to share expertise. You say, why do we want to do Facebook Live today? Why do we want to share our techniques, our secrets to all of you? You know, that's because it's one of our prime promises. Yeah, we want to share expertise to everyone. And we want to give the most proactive care, yeah, to all of you, especially our clients, and not just normal care, it's proactive care, because we want all our clients to have the most positive experience ever. Now, if you still think, hey, YYC is probably just a normal accounting firm out there, just like any other accounting firm, then you're wrong. Why? Because YYC is not just a normal accounting firm. A normal accounting firm would have compliance services like audit service, tax service, accounting service. Well, that's what normal accounting firm would provide, right? But in YYC, we have much more than that. We have our very own advisory arm, and our advisory services ranges from like share structure, strategic planning, revaluation, restructuring, or even the current very hit topic, transformation, cloud and digital transformation. Yeah, we also have our very own business school, right, of which we actually do a lot of workshops, we learn a lot of seminars and talks from time to time. We also serve international firms through our global business services, like we do outsource accounting, outsource bookkeeping, outsource payroll, etc. Yeah. Now, of course, if you see any of these services that, hey, I'm interested to know more, I want to know more about this, feel free to just drop us a message here. Just DM us, drop us a message, and our professional team will get in touch with you to let you know more, yeah, about our services. Okay. Like I said, YYC was established since 1974, so we are turning 47 years old this year, and we call ourselves an international firm. Yes, we are an international firm because we don't just have presence in Malaysia, we also have presence in Singapore. More than 800 employees, 20,000 clients. We have trained more than 130,000 participants through all our workshops, because we've done more than 5,000 workshops. Now, these are all the awards given to YYC throughout all these years. And having said that, we are an international firm. Yes, we don't just have presence in Malaysia, we also have presence in Singapore. But of course, in Malaysia, our headquarters is in Klang Valley, is in Kuala Lumpur. Yeah, of course, we have branches in KL, in Selangor. Of course, we also have branches in Johor and in Penang as well. Yeah. Now, every time when I come to this part, I always like to ask, more questions from you, because I want things to be more interactive. Yeah, I don't want to be just one-sided, speaking alone in front of this computer, in front of this camera. Let me tell you, it's going to be really boring here. So let me just ask you, where are you from? No, where are you from? Where are you viewing this Facebook Live from? You can tell me like which state you're from, which town, which city, or if you say you're from Kuala Lumpur, you can be more specific. Tell me which area of Kuala Lumpur that you're from. Yeah, maybe you can say I'm from Setapak, I'm from Cheras, I'm from say Jalan Ipoh. Some people mentioned that in my previous episode. Yeah? So tell me, where are you from? Where are you viewing our Facebook Live from today? Let me know which state or which town or which city or even which area are you from. You can be more specific. Yeah? So put it into the comment box. Let me see, out of now close to 100 people right now, where are you viewing this all from? Yeah, I know, Richard will definitely answer to me right now. Richard's from Cheras, right? Richard, I know you're from Cheras. Okay, so let me see. All right, Francis Mary says, my name is Mary and from Bangsa. Thank you, Mary, for responding to me. Well, Bangsa is a good place, right? It's always a good place, yeah? Right, I hope you're good. Today is a good Friday, yeah? All right, where else? Let me see. I have Ian Chung from Puchong. Okay, well, I used to stay in Puchong. Puchong is also a very good place. Well, just that the jam is getting more and more terrible to nowadays, yeah, in Puchong. Yeah, of course, it's good development as well. Yeah, there are a lot of developments happening in Puchong. Where else? Let me see. I have Cheras, Richard from Cheras. Yes, I know that. I know Richard is gonna say he's from Cheras. Yes, okay. And who else? Now I have people from Klang Valley area. My Mary from Bangsa, Ian is from Puchong, is from Cheras. Everyone is from Klang Valley area. Anyone from the north or from the south or maybe from the East Malaysia? Anyone? Now just put it in the comment box and let me know where you are. Okay. Now I know, but hey, all of you here, all right, come in. It's not to come chit chat with me. I know you probably say, hey, come on, I want to learn how to, solve tax audit issue. I'm not here to chit chat with you. I'm not here to tell you where I'm from. Understand, totally understood, yeah. And some of you may probably say, I want to come in here to ask questions, yeah. Like Uma Devi just now, right, has actually just posted questions already. Maybe I just answer to Uma Devi's question first, since she posted this so early, right? She asked, like, can claim relief for medical and education insurance for kids Is it 60% of the amount paid? Now, Umar, yes, you can claim medical and education insurance paid for your kids. You can claim, and you are supposed to claim 100%, not 60. Now, the reason probably you will say 60% is because some types of insurance, right? It's a hybrid. It's a life and medical. That means life/medical insurance. Now, if that's the kind of insurance that you buy for your kid, you claim 60% if you choose to claim medical, right? So that is why you heard about the 60%. But if it's just a pure education or medical insurance, you can claim 100%. So no worries about that, yeah? Okay, so let's carry on, right? Jane from Klang, Patricia from Sarawak. Okay, cool. Now we have people from the East Malaysia. Okay, now, all of you here are very eager to learn my technique today, right? And some of you may say, hey, so today we're going to talk about episode 17 already, right? Those who just come in, those who just join, you probably see the caption. Wow, today is episode 17. What about the first 16 episodes, yeah? Like I said, told all of you, right? Don't worry if you missed the previous 16 episodes. Always go back to my Facebook page, Guru Zen Chow. Go to the video section. You will find all the previous 16 episodes, all there for you to view. But I always encourage you to view live session, right? That is on every Friday at 11 o'clock, so that you can have live Q&A session, right, during our session. Of course, I hope you will ask something related to our topic here for the day. All right, so today, what I'm going to talk about? Today, we are going to discuss about tax, episode 17 on tax audit and investigation issue, and we're going to talk about sales rebate. Yes. Today's topic is about sales rebate. And as usual, right, I will explain to you what sales rebate is all about, what is the principle of deductibility of sales rebate. And I'll be sharing with you a case, a real case of which our client got audited by the Inland Revenue Board, and there were some issues that happened to this sales rebate issue, right? And how did we help our client to solve the issue? How did we help our client to save the tax and save the penalty? That's what we're going to share with you, yeah? All right. Now, first of all, what's sales rebate? You probably have heard of this term, especially if you buy properties. Yes, especially when you buy real properties, right? You always heard about, when I buy real properties, the developer will give me certain rebate, right? Will give me certain rebate. Or you may say discount, but call it rebate. Yeah, it's similar. It's similar, but it's not exactly the same, but it's similar. So now, from the person who gives rebate, from their point of view, is this an expense? Yes, it's going to be expense, but because when I do sales, it's my income. But when I give you a rebate, it becomes my expense. And if it is an expense, do I get tax deduction for this rebate? Now, we have to look at general principles of deductibility again. And as usual, those who have been following me, you would know the general principle of deductibility always comes from subsection 33, Reg 1 of the Income Tax Act 1967. Yeah, so Income Tax Act 1967, section 33, subsection 1 talks about how could an expense be deductible, and there are conditions, right? First, it must be incurred during that period. So rightfully, well, if you give a sales rebate, it should have incurred, right, during a certain period, and of course, you should be able to get deduction, right? But what are the other conditions? It must be an outgoing expense. So is sales rebate an outgoing or expense? Well, I would say yes. Why not, right? Because when you give sales rebate, it is an expense in your account. And of course, sometimes you may probably need to also pay back money. I think some of you who have purchased property before, you would have seen that sometimes, right, after you have purchased a property, and then when it comes to the rebate time, the the developer would actually pay you back some money, right? Would pay you back some money as rebate. Yeah, as rebate. All right. And of course, it has to be wholly and exclusively incurred. Now, what do you mean by wholly and exclusively? That means that the sales rebate must be related to the whole business. It must be a rebate relating to the sale, relating to the business, and only it is called wholly and exclusively for the business. Yeah, and sales rebate, usually it would. I would not simply give you a rebate and say this is not relating to my sales, not relating to my business, right? Usually it wouldn't happen, isn't it? And it must be revenue in nature. Now, when I say revenue in nature, that means when you incur such expense, you don't bring into existence an asset. You don't actually buy an asset, yeah? But is sales rebate gonna bring you in an asset? No, what, right? Because I'm gonna pay someone something, or rebate some money to someone, and I don't get any back. Yeah, I don't get any asset back, isn't it? I don't buy any asset. So yes, it's revenue in nature as well. And very importantly, it must be in the production of gross income. That means the rebate is for me to make more sales. That means the reason why I give rebate is because I want to entice people to buy my things. I want to encourage people to buy my product so that, right, this is called in the production of gross income. The reason I give rebate is just to really entice and encourage people to buy my stuff. That rebate will be called in the production of gross income. See that? Now, so generally you will see, hey, rebate looks like, satisfying all these, right? A rebate would satisfy all these conditions, right? So sales rebate should be tax deductible, isn't it, right? Well, but I have to share with you a case where our client got audited and that something happened to the sales rebate that they offered. Now, what is the case? Let's go to let's go to the background of the case. Yeah, let's look at what actually happened to our client. Now, but before that, well, I see AK, Angela from Kucha Lama has just said hi to me. Hi, Angela, welcome. We've just started, don't worry. All right. So now, background of the case. Okay, we have got this client. Now, as usual, property developer. I told you, right? Usually, rebate, this kind of sales rebate is given by property developer. But of course, there are some other industries of which you will probably also give sales rebate. Like, for example, you do trading, you do wholesale, yeah. And if your buyer, your customer has purchased up to a certain target, certain amount, you say, okay, if you hit this target, I'll give you back the rebate. That always happens as well. But in our case, our client is a property developer. So our client has actually given a discount, which is actually in the form of sales rebate, on a property sold. Okay, and it's common, right? You sell a property, you give rebate. Now, but this client of ours, they sell the property to its holding company. The holding company, right? A related company. They sell it to the holding company and they give a rebate. Now, would there be any issue? Now, no issue yet. I mean, because if you have been giving rebate and you give rebate to the holding company, it seems okay, right? But this is what happened. This sales rebate given has actually reduced the income of the client. Now, when you give rebate, it is an expense. And if you give an expense, it will reduce the income of this client, of this sales. You reduce your sales, isn't it? So now, if you can imagine, if you give a little bit of rebate, if you give a small rebate, your income would not reduce by a lot. If you give a huge rebate, your income will reduce by a lot. And if your income is reduced, your tax payable is reduced as well, right? Right. So you can you start sensing, there could be an issue over here, because if you give a very huge rebate, especially if it's to a related company somehow, to a holding company somehow, the Inland Revenue Board may think, hey, are you trying to manipulate this rebate? Are you trying to give a very huge rebate so that you don't pay a lot of tax? And that is exactly what the issues that are being raised by Inland Revenue Board. So when the Inland Revenue Board came in, they checked and they audit the account of our client. They found out that, hey, the rebate given to the holding company was actually higher than usual. That means, this developer usually does not give such a high rebate to others, to his other clients. But to the holding company, the developer gives a higher rebate. So that's something unusual already, right? That's something unusual already. So in the report say, I'm not going to allow this. I'm not going to allow this, because this is something not that you usually do. You are giving something higher than usual. You're trying to reduce your income more than what you usually do, for other people. So I think this is not genuine. I'm going to disallow the whole rebate. And disallow the whole rebate because they say there's no such rebate given to third-party purchasers during the same period, right, of purchase for the units of the same size. So that what Inland Revenue Board is trying to say over here is that, hey, the same type of unit, the same type of the same size that you're selling to third party, you don't give such high rebate. But to your holding company, you give such a high rebate. And if you say, oh, because I have some promotion period going on, well, I also look at the same period of time. The same period of time to third party, you don't give such a high rebate. But to your holding company, you give a high rebate. So the IRB says this is not reasonable, and the IRB disallowed the expense. So what happened? They said this related party transactions, or in short RPT, this related party transaction is not at arm's length price. It's not an arm's length. Now, what do you mean by arm's length? Some people might say, hey, what is arm's length? When you use the term arm's length actually means market price. Yeah, in other words, the arm's length means market price. Why arm's length? Because, let me just tell you a story. Some people always ask me about this. Why would people use the term arm's length, and why do you just call it market price? Very simple. Very simple. You see, if you are very close to your friend, right? If this is your buddy, your good friend, you go very close to your buddy, right? You go closer than a length of an arm, right? You go closer than the length of an arm, right? Because you probably hug your friend as well, right? But if you are not close to this person, if this person is an independent person, will you go that close? Will you be allowed to even go closer than a length of an arm? No, right? You have to stay apart at the distance, and that distance is the arm's length. So what it means here is that arm's length price means an independent price, yeah, independent price that you would do to a third party that has no relation with you. That's what we call arm's length. All right, so that's now you know, yeah, why we call arm's length. Yeah. All right. Now, of course, Angela has just asked about PP. Don't worry, Angela, you are lucky today because at the end of today's session, I have a bonus session for you all. That's about transfer pricing. I'll talk about transfer pricing, Angela. Yeah, so don't go anyway. Stay until the end. Yeah. Now, so go back to this. IRB now says, I suspect this is not arm's length. This is not genuine. I'm not gonna allow this. Then how? Look at this. Look at this. Yeah, issue raised by IRB. The IRB say 1 million worth of rebate. Yeah, right. They say, hey, this is for related company, right? Which is the holding company. And say based on the total, based on the frequency of discount. Yeah, they say, well, most of the discount you are actually giving it to your holding company, and they found out that other buyers do not get such discount. Do not get just discount. If we look at the similar date of purchase, and the similar size, they don't get such discount. So this kind of discount, that you give to others, right? That you give to third party, it's not the same. It's not the same as the one that you give to your holding company. And they think that, hey, if this is not given to everyone, right? This kind of discount is only enjoyed by your holding company. No, I don't think this is allowed, and therefore they disallow the whole 1 million, right? 1.04 million worth of rebate. Everything got disallowed. Now, actually, there are a lot of units. I'm just showing you here, right? There are a lot of units, and all these units have certain rebates. If you add all up, it's 1.04 million. Everything disallowed. And how? Now, the client, of course, is unhappy. The client said, hey, this is genuine rebate, I really gave such rebate to my holding company, and my holding company actually purchased it at a lower price, yeah? Even though it is a expense over my side, but, well, it becomes something like an income over my holding company side because the holding company actually spends less, yeah, to purchase these units. So what we did is we looked into the case, we studied the whole thing, and this is what we found. This is what we found, and this is what we appealed, yeah, to the Inland Revenue Board. We told the Inland Revenue Board, we said, hey, look, right, IRB, look, even though, yes, our developer has given a higher rebate than usual to our holding company, but look at it, the purpose of the rebate is not just to manipulate, the discount and to reduce the income. Actually, the whole reason of giving a higher rebate is because the selling price has been marked up. The selling price, the original selling price before the rebate, has been increased. Because they want the buyer, which is the holding company, to be able to get a higher loan from the bank. So that means this developer who sells the unit to the holding company, instead of using this normal price, they increase the price higher and they give a higher rebate to make it down, and the net price is actually the same. So we look at the margin of the net selling price, between the third party purchaser and the holding company, and the margins are the same. In other words, it means the net price of the third party purchaser, people who are not related, against, if you compare the net price of these people against the net price of the holding company, they are the same. Even though you see a higher rebate in the units sold to the holding company, that's because the selling price has been increased and we give a higher rebate. And when it was brought down to the net selling price, they are actually the same. The margins are the same. It is the same. So we substantiate it with a list of comparison. We show the Inland Revenue Board, look, this is the net selling price to other parties, to third parties, non-related parties. This is the net selling price, of course, with higher rebate, but the net selling price to the holding company, hey, they are the same. Yeah, margins are the same, net selling price. So we give a comparison list. We substantiate with all the credit notes, yeah, to the third party, because some third parties also enjoy certain discount, yeah, and also to the holding companies, and the sales and purchase agreement as well. Yeah, the sales and purchase agreement as well, to show that, hey, look, the selling price, the original selling price before the rebate for holding company is higher, for the third party is actually lower, right? And that is the reason why they give a higher rebate. So we do all this analysis, we compare all this, and of course, the Inland Revenue Board agreed and dropped the issue. Yeah, because what's the rationale? What's the whole rationale behind? Now, the whole rationale behind is we need to justify that the pricing between related parties, right, and is actually at arm's length. Is at arm's length, which means here, even if you sell it to a related party, you are not supposed to sell it significantly higher or significantly lower. It has to be at arm's length, which is similar to what you'll be selling to a third party, yeah, to an independent party. So of course, we have all the proper documentation and the commercial reason justify all this, right? And we want to prove that the RPT, the related party transaction, is at arm's length. And if it is at arm's length, it is legit. The whole thing is legit. And of course, the expense should be allowable. See, and this is why we are able to help our client drop the issue and make our client able to claim expenses for this sales rebate and make it tax deductible. See that? This is how we help our client to solve the issue. Now, but having said that, I think Angela has also asked something about TP, right? Now, what is our advice over here? Our advice here is that, first of all, please have proper documentations. Yeah, it's always important to have documents to prove, to justify that what is the purpose of the rebate. If you give a higher rebate than usual, what is your purpose? Yeah, like an agreement to spell out the basis, things like that. Yeah, and please ensure your RPT, your related party transactions, are all transacted at arm's length price. Yeah, again, I've told you what is arm's length, right? Independent price. Yeah, independent price, right, to someone that is not related. Yeah, that is called the market price, right? And if you have a lot of related party transaction, this is very important, right? Please have a transfer pricing documentation, TP documentation, if you have related party transactions, because only with TP documentation, you can prove that your price is at arm's length, yeah? Because TP documentation is something to show what is the price that you will sell to a third party, independent third party, and what is the price that you are selling to your related party, and how do you prove that what you're selling is actually still arm's length. This documentation is the one that will help you, right? Now, let me give you a bonus session, yeah? Let me give you a bonus session now, because I think Angela has asked about TP, and I know a lot of you, after hearing this case, you will probably also think about transfer pricing. You will talk about, hey, so what is transfer pricing over here? So I'm going to give all of you a bonus session now. Today is really good because you have a bonus. I'm going to briefly tell you what transfer pricing is all about. Some of you may still do not know what is transfer pricing. What is the concept of comparability? Let me just show you this. You see, what we are trying to say here is, right, if you have transactions, yeah, between your related party as well as third party, yeah, the transfer pricing concept and the comparability concept means you should not have material differences. You should not have material differences between transactions between related party and a third party. Yeah, you have to accurately adjust it, right? There must be a reasonably accurate adjustments to eliminate material differences. Sometimes you may say, hey, related party is, closer. That's why I can sell at a discount. This is not an outside party. The cost that I incur is lower. I don't have to incur so much sales and marketing costs to close the sales. Well, yes, if that's justifiable, you can do adjustment. Yeah, you can do adjustment as long as you have eliminated all the material differences. See? Yeah. And you may probably ask, when you say related party, What do you mean by related party? Now, what is transactions between associated person? Because every time when we talk about transfer pricing, we say if you have transactions with associated person, it means this is related party. But what is associated person? Now, any business transaction, of course, excluding dividend, right? And it applies to cross-border or domestic transaction. Don't just say, oh, our related party transactions, EP, only applies to international cross-border transactions. No, it applies to both cross-border and domestic RPTs, right? Of course, if you're not carrying a business, forget about TP, right? If you're not carrying a business, that doesn't really affect you. But if you're carrying on a business, yes, you have to look at TP. Now, you may probably be buying some finished goods, semi-finished goods, or raw materials, or PPE, or even intangibles. All these would fall into, TP transactions. And this one, management services, administrative services, technical and support services, marketing fees. Now, I know you will have this with your related party, right? You will have all these kind of transactions: management, admin service, technical service, marketing, you would have these kind of transactions with your related companies, right? These are called related party transactions, yeah? And intra-group financing as well. If you are lending money or borrowing money from your related company, these are all TP issues as well. Now, let me tell you, why do you need to prepare a TP? Now, first, TP report is for you to prove what you are transacting with your related party is at arm's length price. But what kind of TP report should you do? I think some of you may have heard about full TP report, limited TP report. Hey, what is this? Now, first of all, right, full TP report is a very, very comprehensive one, yeah. But limited one, we will only look at the most important details. But whether you need to do a full TP or limited TP, it depends on what's the value or amount between your related party. If you say, okay, I have a gross income, which means my sales or my turnover, I have a sales of more than 25 million. And my related party transactions total value is already more than 15 million. If both of these are fulfilled, now you have to prepare a full transfer pricing report. Now, or if you say you lend money or you borrow money from a related party of more than 50 million, you also have to do a full TP report. But if you say you do not fulfill this, say your gross income, your sales is not 125 million, or your related party transactions less than 15 million, well, you still have to do a TP report, but limited one. Or if you say, I do give financial assistance, but less than 50 million, well, you still have to do TP, but limited one. Okay, but limited one. Now, why is TP report so important right now? That's because, I need to update you from 2021 onwards, 1st January 2021 onwards, our law has changed. Yeah, please remember, our law has changed from January 1st, 2021. Yeah, if you have related party transactions, the Inland Revenue Board, when they come to perform an audit, they will ask for TP documentation. They will ask you to provide a document to prove all your related party transactions are at arm's length. If you say, sorry, I don't have this TP report, you know what would happen? You will get fined at least 20,000 minimum. I'm talking about minimum 20,000 per year. Yeah, and it can be up to 100,000. Maximum can be 100,000, per year. So if the Inland Revenue Board comes and audit, they may probably check for 3 years up to 5 years. Hey, we're talking about, if it's 5 years, a minimum of 100,000 penalty, and it can be up to 500,000 penalty. And let me tell you, you are not given a lot of time to prepare TP documentation when you're selected for audit. They will ask you to prepare in 14 days. In 14 days, if you can't provide this in 14 days, including late submission, you can be penalized 20,000 minimum per year. So this is why transfer pricing documentation becomes so important, because it's a document to prove your market price, you have to prove your arm's length price, and it is something that is now essential for you to produce if you're selected for audit. And you only have 14 days. Let me tell you what, to do a TP documentation in 14 days for a few years, it's impossible. It's impossible. You have to do it early. Early. Now, that's only about not able to provide the TP documentation. But what about if they come in and Inland Revenue Board found out that, hey, this is not arm's length price, this is not market price, I have to do adjustment. I have to do adjustment on the pricing. Now, the thing is, if they do any adjustment, any TP adjustment, they say, this is not market price, I have to adjust it a bit, the adjustment that have been made, there will be a 5% surcharge. It'll be a 5% surcharge. Whether or not you have to pay additional tax, they don't care. Once they've made adjustment, you have to pay a 5% surcharge on the adjustment first. Let me give you an example. Let's say if you have a transaction with your related party where it's worth 1 million. The Inland Revenue Board feels that, hey, 1 million is not the correct amount. The market price should be 1.5 million. So I adjust it to 1.5 million. So there's a 500,000 adjustment. Yeah. Now, whether or not you have to pay additional tax, yeah, you have to pay a 5% surcharge first on the 500,000 adjustment. Which means the 500,000 adjustment, they multiply with a 5%. You got to pay a 25,000 surcharge just because of the adjustment. This is what's happening in this year, from this year onwards. Yeah, January 1st, 2021 is already effective. And of course, when they come to do transfer pricing audit, or they ask you to prepare TP documentation, ask you to present TP documentation, and if you can't, they will also, right, have the power to look at, hey, if the structure or the characteristic of the business is not as per what the market is supposed to be, they have the power to actually disregard any structure adopted, right, or any transaction, right, where the IRB thinks it's fit. Yeah, so this is very important for you to understand. Okay, so I see questions coming in already. Now, so I know I probably scared you a bit, yeah, on TP, but still I want to tell you, if you receive any audit letter, please do not be afraid. If you receive any tax audit letter, yeah, ask you for documentations, tell you that, hey, you have got this done wrongly, you have that done wrongly, you got to pay additional tax, some penalty for this and that. Don't be afraid. I always tell my clients, don't be panicked, calm, be calm, stay calm, send us the letter. When you receive the letter, send us a letter, send it to either to YYC Advisors page or go to my Tax Guru Zen Chow Facebook page. Drop us a message, yeah? PM us, drop us a message. Let us look at the letter. We can do a complimentary online consultation for you. We'll see how we can help you to solve the issue, how we can actually help you to manage this audit. So don't be afraid, just bring that letter to us for us to have a look. We can do a complimentary online consultation, and we can then tell you how can we help you to solve this issue. All right, that's what I want to tell you, and I can see questions are coming in. So let's move on to the Q&A session, right? Let's move on to the Q&A session, but let me drink some water, yeah? Let me drink some water, and I'll be answering to all of your questions. Now, let me just bring you back to this slide so that you can know what's our Facebook page, yeah? Right. Okay. All right. I have a question here from Angela. The other side, Angela has got a question. Angela was asking, actual currently only have amount due to directors. Now, Angela, now if the current company is only having like amount due to directors, that could actually trigger the Inland Revenue Board trying to say, hey, why there's an amount due to directors, which means the director is lending money to the company, right? And why are you not paying interest? Of course, if you can justify properly, that the director is actually helping the company to support this business, well, that's still okay. Yeah. But remember, if it's the other way around, if there's an amount due from director, then you have to do the deemed interest income. Okay. All right. I have a question here from Uma Devi asking about, please explain about quasi loan. Uma Devi, I'm sorry, but I'm not too sure about what you mean by quasi loan over here. Maybe if you can explain further, yeah, like what is quasi loan, then I can explain more. But because I think I've heard about this term, but I do not really know how this whole thing works. Maybe you can explain more to me, then I can tell you the tax implication about the quasi loan. Yeah. All right. I have a question here from Sharon. Okay, Sharon Tay is asking, what if gross income is more than 25 million, but RPT is less than 10 million? Do you need to do a full or limited TP? Very good question, Sharon. Now let's go back to this here. We say if your gross income is more than 25 and RPT is more than 15, not 10, 15, then you have to do full TP. But if you don't fulfill both, now you have to fulfill both to do a full TP. If you don't fulfill both, let's say your income is more than 25, but your related party transaction is actually less than 15, then you're still okay to do limited TP. You're still okay to do limited TP report. Yeah. So to answer to your question, Sharon, you can do a limited TP report over here. Okay. So no worries about that. Yeah. All right. Let me just go back to here. I think I have another question from the other side. The other question from the other side is from Farm. Yeah, Farm. Okay. Farm FY is asking this question. The property developer given the rebate to purchaser just received a rebate letter, not issued a credit note because they just signed the SMP agreement, not invoice. So just issued a rebate letter, only not credit note. Is it okay for LHDN? Now, Farm, this is what I would say if you have a proper rebate letter that has been agreed by the purchaser. It's signed by the developer. It's agreed and acknowledged by the purchaser. This is still a valid document. This is a valid rebate document. It does not really have to be in the form of credit note because I have told you, rebate and discount, they are similar but not the same, right? If you give a discount, of course, you have to give a credit note. But if it's a rebate, sometimes you will probably just do a letter. Yeah. So as long as this rebate letter is properly signed in a proper letterhead and is acknowledged by the customer, by the purchaser, well, this is a good document, right, for LHDN to accept. Yeah, that means from the developer's point of view, it can be, an expense. All right. Okay, we have another question here. This is from Zifang. Okay, so Zifang is asking, how do we know whether it's at arm's length? Very good question. If transaction is only related companies, advanced, and no third-party transaction, very good. Very good question. That's from Zifang. How do we know whether it's at arm's length? Now, you see here, we sell to a related company. To prove that it's at arm's length, we need to provide TP documentation. And TP documentation is the one to prove that it's at arm's length. So if you say, if I only have related party transactions, I do not have party transactions, how do I do that? In TP, in transfer pricing, one thing that we need to do is we need to do comparison. We need to do benchmarking. That means we need to look at the industry, the same industry of which you are in. What would be the selling price for your same industry, for your same product? What would be the margin, right, of your company, of the same industry, if this industry were to sell to a third party? If you say you don't sell to third party, well, it's okay. We can do comparison with others, yeah, within the same industry. And if the margin is the same as yours, right, if the selling price is similar to yours, well, that could justify that your related party transaction is at arm's length. See that? So that is what TP documentation is all about, yeah? It is about doing a comparison with other companies within the same industry. Okay, Zifang? All right, let's carry on. We have another one that's from Sharon as well. How to do TP documentations for amount owing from director. Now, if you have amount owing from director, you just have to do the deemed interest. Yeah, you have to do the deemed interest, yeah, because the director is not owing the company's money. In other words, the company is actually lending money to the director, right? Then you just have to do the deemed interest. If it's just amount owing from director, you don't have to do any TP documentations. Yeah, you don't have to do TP documentations as long as you have done the deemed interest, right? That will be good enough. All right, Sharon. Okay, we have a Lee Win Win. Wow, I like your name, Lee Win Win. Okay, so Lee Win Win is asking if we charge rental and admin fee to company, which is same director, but no share held for both company. Is it TP? Is there any TP? Now, let me tell you, TP, transfer pricing, when we talk about associate, when we talk about a related party, we don't just look at the shareholding. A lot of people would always say, oh, it must be holding and subsidiary relationship, then only the transfer pricing issue kicks in. No, the TP talks about control. If you say both companies are with the same director and the same director can control both companies, that means both companies are controlled by the same person. They are called related parties. They are still called related parties because it's very logical. If I can control company A, I can also control company company B. That means I can manipulate the transaction price. I can tell company A, hey, don't charge so high to company B. Or I can tell company B, hey, please sell higher price to company A. I can control because both companies are controlled by me. You see, so if they are with the same directors, the Inland Revenue Board would still say these are related parties, and they will still need you to do TP documentation for your rental and admin fee. See that? So don't just don't just say, oh, they must be shareholding relationship. No, not really. It's about control. It's all about whether you have controlling power for these related parties or not. Okay, all right. So now I see a lot of people are asking about TP. Let me just briefly tell you more about TP. Now, many people probably have heard about, hey, so it looks like we have to do transfer pricing documentations already because of this. Yeah, because of this, let me show you. Because of this penalty, this fine. If I don't have a TP documentation and I have related party transactions, once I got audited by the Inland Revenue Board, and if I cannot produce anything, or even if I have submitted the documentation later, I can be penalized up to 100,000, minimum 20,000 per year. I'm talking about per year. So many people are very afraid about this and ask, hey, how can we do this? Anyone can help me on this? Now, don't worry. YYC can help you. And let me tell you, YYC is right now doing a lot of TP documentations, right? We have a dedicated TP team just to do transfer pricing for all our clients, and we do it at a very affordable pricing. How affordable? TMS, yeah? How affordable? If you want to ask, TMS, drop us a message. Let us look into your case and see how complicated your case is. But let me tell you, our pricing is very competitive, very affordable, because we really want to help a lot of people out there. I know a lot of people, especially SMEs, a lot of companies, especially small, medium enterprise, they know that the transfer pricing exercise is very expensive. To prepare a transfer pricing documentation is expensive, but we are here to help. That's why we give a very affordable pricing. But drop us a message to ask more, right? Drop us a pricing to ask more, yeah? Okay. All right, I have more questions. Let me go to question from Vivian Lee. Vivian is asking how to prove that directors are controlled. Let's say another company, all approved transactions are none of the directors signed, so can say director not control. Well, Vivian, whether a director can control or not, of course, it's a very subjective thing. And of course, one of the things that we look at are documentations, like what you said, whether the transactions are approved by these directors or not, And of course, the shareholding of the director would also sometimes come into play, because the director could be a shareholder, right? The director could be a shareholder if this director also holds shares, yeah? And the shareholding is actually more than 50%. That means, hey, this director is in control, right? That is a very apparent evidence. But other than that, hey, whether these transactions are approved by the director or not, these are the things that would show as well. You are right, yeah? So it's a subjective thing. So if you say, hey, I need to know whether the director is in control or not, we need to assess. Yeah, shareholding is something that we have to look at if they're also shareholders, and of course whether the transactions are signed by them, approved by them. This is the second thing that we have to look at as well. All right, so you're right. Yeah, we have to also look at whether the transactions are approved by the directors or not. Yeah. Okay, then we have a question here from Lee Win Win again. By the way, rental charge to related company, can we just prepare tenancy agreement? We'll do. Well, tenancy agreement is something that you have to prepare just to substantiate that there is indeed such tenancy. You see, a tenancy agreement is something to show that there is indeed such tenancy, there is indeed such rental, but it still cannot prove whether the rental is at arm's length or not. You cannot prove whether this rental is at market price or not with just a tenancy agreement. You have to compare. You have to do a comparison and what's the market rate in the market for this kind of tenancy, and are you charging that market rate or not? This is what we call transfer pricing documentation, and with just the tenancy agreement, it is not sufficient yet. Yeah, Lee Win Win, just let me remind you. Yeah. All right, and then I have a question here from Vivian. Oh, if the director both are also the other one. What do you mean by if the director both are also the other one? Okay, one holds 15%, another 5%. So will TP come in? Again, Vivian, I know you may say, oh, shareholding wise, 15%, 5%, it's not even more than 50%. I don't have control. So that's the first thing, whether shareholding will constitute a control or not. But what if even I hold 15%, I hold 5%, but I'm called the managing director? I'm called the managing director, I have to approve major transactions, that makes me having control again, right? So don't just look at shareholding. We have to look at more things, yeah? We have to look at more things, yeah, Vivian? Okay? All right. So any more questions? Let me see. Okay, I have some question from the other side from Farm. Farm FY is asking, how about the amount due to directors subject to TP? Need to charge interest or not? Now, Farm, if it's a amount due to directors, most of the time the IRB would not talk about TP when it's to directors, But like I said, amount due from directors, you have to do dim interest. Amount due to directors, right? Usually they don't on this. Yeah. Okay. There's a question here from how do I pronounce your name? CHTAC. Okay, never mind. I'll just say CHDAC. Okay. It says then if director advance the company and charge company loan interest, which is higher than the commercial lending rate, is it okay? Well, of course. Well, of course. I would say if you use the commercial lending rate, the commercial average lending rate, that would be good. If you say you charge higher, well, that's okay, but how much higher? Don't make it significantly higher. If it's significantly higher, then it may not, fulfill the market price concept already. Yeah, the market rate usually we say is average lending rate. So let's don't make it much higher. If it's slightly higher and you can justify why slightly higher, then okay. Yeah, but I would still recommend if you can follow the average lending rate, that would be the best. Right, that would be the best. Okay, I think yeah. So I think I've answered to all questions already. Very good. And it's 50 over minutes. Yeah, again, we try to close this within an hour, for you to learn. So today, again, we have learned something new. We have learned about sales rebate. We learned about sales rebate could be an issue if you give a very high rebate, but of course we help our client to solve it. And of course, we also talked a little bit about transfer pricing. And let me remind you, transfer pricing is going to be very critical, So please ensure you have a proper transfer pricing documentation. And last but not least, just let me remind all of you again, if you receive any tax audit letter, please don't be afraid. Please don't be panicked. Send that letter to us. Drop us a message, or you can go to our YYC Advisors Facebook page or my own Facebook page, Tax Guru Zen Chow. Drop us a message, show us a letter, let us do a complimentary consultation with you and see how we can help you. Yeah. And last but not least, remember, go to my Facebook page, Tax Guru Zen Chow, like, share, and most importantly, follow my Facebook page, because I'll be doing this kind of Facebook Live every Friday at 11 o'clock. So if you don't want to miss it, every Friday at 11 o'clock, make sure you stay tuned, right? Every Friday, watch my Facebook Live, and I'll be sharing more and more things with all of you. And these are the secrets that I want to share with you and teach you how to solve tax audit issue. All right, so go to my Facebook page, like, share, and most importantly, follow. All right, so till then, I'll see you again next week, maybe, right? I'll see you again next week, and hope that you have learned something today. Hope that I have already answered to your questions, and have a great week ahead, and have a great weekend ahead. I would say it's Friday, Enjoy your Friday. Have a great weekend, and I will see you again next time. All right, so hope to see you again next time, and have a great time. All right, so that's all for now. Thank you so much. Thank you all. Bye-bye. Bye-bye to all, and have a great day. Bye-bye.
我相信我可以，有目标就往上爬。你相信你可以，勇敢的往前冲吧。有想法就有办法，有办法就不用怕，我们一起到达，是那。